Hey, what's going on, everybody? Welcome back to another update of my Canadian dividend investing portfolio adventure. So what I'm doing here, if you're new to the channel, first of all, welcome. And if you're a subscriber, welcome back. What I'm doing here is I'm just documenting my journey as a Canadian investor, buying, pretty much just mostly buying, just occasionally selling dividend stocks on the Toronto Stock Exchange, all with Wealthsimple Trade, Canada's free trading app, and I'm tracking everything in this Google spreadsheet that I made, and there's links to get the spreadsheet and Wealthsimple Trade and all that in the description below if you'd like to try them out yourself. So sitting at the moment, we're looking at about $64,000 in stock value. I'm up about 4,200. This is going kind of wild all the time. Sometimes it's up like 5,000, sometimes it's up 4,000. It's swinging by a few hundred all the time. And I think basically as this value gets bigger, so are those swings, because every little tiny percentage of a bigger number is going to be a bigger swing. So I try not to worry about that too much, but as long as it's in the green, that does make me feel good. But yeah, we're looking at about 7% all-time gains since September of 2020. Now, almost all of my stocks pay dividend, so the average yield is just shy of 4%, and basically 3.96 times 64,000 gives you $2,535 per year in passive income from dividends. So this is something that I'm really interested in. It's not the only thing I focus on. I am mostly interested in overall gains. So the total, like this, as long as this number is going up by the time I'm ready to take my money out, then we're good. Or by the time I'm ready to start pulling out my dividends. But I don't want to just go into pure growth stocks because I do like that there is some cash flow here in case I need it. For example, if there's a month for some reason and I just need $200, I'm going to pretty much have that every month now, just as a backup. What I am doing, I'm reinvesting this all the time, but just in case, I like having like a dividend growth oriented portfolio where the whole thing is growing, but also there is a little bit of security here should I need the dividends just in case for something. And I live a pretty unpredictable life, and it's actually not unreasonable to think that at some point I might need to pull out some dividends before I'm retired. So anyways, I'm just rambling about my life. Let's get into the portfolio here because I want to buy some stocks today. Actually, we can see here that I have $180 available in the account, and I'm just going to add in a little bit more in Wealthsimple Trade. So I'm just going to do that here, add funds. It's going to take the money like instantly, so we're just going to put in $700. Lately, I've been trying to invest $700 a week. That's $100 a day, which honestly is far more than I ever thought I would be investing, but I was able to make it happen. I was working a crazy amount earlier this year, and plus I make a little bit of money on the side as well with some other businesses. And so I'm able to sustain it for now, but it's actually, I'm not sure if I'll be able to always sustain $100 a day. That's like quite a lot, I think. But anyways, we got $880 in here that we want to spend. And when I'm looking here in my portfolio tab, we can get a pretty good idea of what I'm interested in. So first of all, if we sort it by percent of holdings, we have the biggest positions at the top. And going down this column, you can see these numbers are descending and having the smallest positions at the bottom. I am a little bit interested in getting all of them up above $1,000 at some point. And so here you can see BMO, Great-West Life, and Bank of Nova Scotia are all below 1,000. Now, I was looking at BMO there. Like Bank of Nova Scotia is just hit a little bit of a spike right now, so I don't want to buy into it at the moment, whereas Bank of Montreal did not. So I'm going to go for that one. And Great-West Life, maybe next week I'll add some more into it. For now, these three guys down here, Cineplex, Intergex, and DCM, I just don't feel like adding to them. Sometimes I do, sometimes I don't. But as we go up the list, I'm trying to prioritize my smaller positions over my bigger ones. And I was looking at picking up some more in Acon. Again, these guys are in the red, down 8%. That's quite a lot, but I'm just going to keep adding more into them in hopes that they do come back. If we actually jump and take a look at their spark line, where are they? They are right here. If you look at the last 5 years, we're not up that high in the last 5 years, and we can double check exactly what the percentage is in Wealthsimple later. But I think this is a pretty good opportunity to be buying in at the moment. And if you look at their max chart here, we're generally seeing the stock moving in the right direction. It's not just slowly declining. So I'm pretty sure that this is some sort of cyclic dip, and I'm going to just be adding in more into these guys. I do also want to add in a little bit more into Pizza. These guys are doing really great for me. Up 7%, just steadily climbing since last year. We can also take a look here. They should be right above, right here. They actually took a big hit a few years ago, but have been like nicely climbing back up and just did a pretty nice pattern, I suppose. So I'm just going to slowly add into those guys. I really want to get these up to the point where I can kind of have like a self-directed drip where each monthly dividend is enough to buy another share, and then just kind of do it that way. With ATD.B, I've been looking at them as well. They've dipped pretty hard. Let's switch this to 5 years and then zoom in on ATD. I've actually changed to ATD, not ATD.B. Speaking of which, if you have these in your portfolio, and previously you were tracking them with ATD.B, just go through and remove the B on the portfolio tab here, and anywhere it shows up, so it'll be in the transactions and also in the dividends. Otherwise, you're just going to be experiencing errors, but they just kind of changed the name of their ticker there. But anyways, they've been going crazy in the last little bit here, but I'm happy to be buying down here versus up here, so I'm going to pick up a little bit of those today as well. Another one that I was looking at is EIF. I love these guys as well. Nice Canadian company paying monthly dividends, very high dividend yield of 5.5% pretty much. And when we take a look at their spark line, let's see where they are right here in the last 5 years. They've definitely declined or just dropped off in the last little bit, and who knows? They've gone down pretty far in the past, but I'm still in the green, and I think that's okay. I'm going to add in a little bit more in case they continue this upwards trend that they've been experiencing lately. And then I think where else were we? Lastly, another one I was looking at here was Waste Connections. Love this company. They just are solidly growing as well. We take a look in here at WCN. That's exactly what you want to see. Just going straight to the moon. Very slowly, to be honest, but nice and stable. And every time they like pull back a little bit, like in here and in here, I always try to buy. So in here, if it's a little pullback, that would be a good opportunity. So I'm going to be picking up just one of them because they're quite expensive. Today they're around $170, and their yield is pretty much negligible. But it's just this growth is like, man, that's really what you want to see. And then I think the last one I was looking at in here, as we go up the list, I'm trying to buy like I said, more towards the bottom to build up these smaller positions, but I just can't hold. I think if I have any cash left after buying the rest, I'm just going to put the rest into AQN. These are one of my biggest positions, but they're just down so far, and I would just want to just throw in a little bit more because it just seems like a good opportunity to me at this moment. So let's jump into Wealthsimple Trade and make some of these purchases. So we can start with Waste Connections. I think this will be the most expensive one of the day. Nice, they've dropped down 2% in the last day. That's good. I'm trying to buy them at a discount, and I'm definitely getting it at the moment. So I'm just going to take one. That's all I can afford with them. We're going to take one. I know how a market order works, so I'm not going to show that again. And we're going to confirm that into my tax-free savings account. I do have to be careful because I am going to approach my limit for my tax-free savings account at some point, but it's based on deposits. So once the money's in the account, you can do whatever you want with it, but you just got to watch that you don't go over your total available deposits. Another one that we can buy here next would be EIF. Again, you can see exactly the same thing going on here with EIF that we saw in the spreadsheet. And I wanted to pick up 3 of these, so it's going to be around $120. That'll be good. Take it out of market buy in the tax-free savings account. Cool. Okay, so the next one, let's throw in some pizza. Like I said, I'm just trying to build up my dividend from these guys because they are paying monthly, and they do have a really nice dividend yield of almost 6%. That's crazy. And paid out monthly, that's just so nice. So we'll take 12 of these. It's going to be about $140. Also in the tax-free savings account, it's always good to just check where you're actually putting your shares. Okay, the next one up on the list was ATD. Buying these guys at a bit of a discount today. Take a look at the 1 day. Oh, they're up 1% in the last day, but down 2% in the last week, so that's fine. With ATD, they're a bit more expensive, so I'm just going to take 3. Around $145 in the tax-free savings account. Nice. And we're going up the list still, so actually maybe going down the list, depends which way you look at it. But I did want to pick up BMO. They've been dropping a little bit. Yeah, they've been hit pretty hard in the last week, unlike some of the other banks, which are just like skyrocketing at the moment. So I kind of like holding a lot of different banks, and you can kind of pick and choose which one you want to buy on any given day. So anyways, with these guys, $130 for one. Nice, we'll take one of those and confirm that order. All right, and then also I was looking to pick up Acon, so that's ARE. Where are we? TSX, Acon Group. Gotta watch some of these companies are like pretty similar. You don't buy the wrong one. But Acon, I think I want to pick up about 9 of these. Let's see if I can shoot that up to 9. It's It's going to be about $144. Yeah, let's do that. Confirm that order. Nice. And the last thing I wanted to do, I've just got $32 left in the account, is I just wanted to throw the rest into a QN, Algonquin Power. And I'm pretty sure I'm going to have enough for probably one share. I get two? Nope, not today. That's okay, I'll take one while I can. And yeah, we'll just take that. Hopefully it's still on discount. We'll see, I'm not just plummeting downwards. But we'll confirm that. Yeah, into the tax-free savings account. Right on, guys. All right, so now what I want to do is I want to take all of this information in the activity tab and transfer in the exact quantity and price of each of these, for example, 9 shares at 1604, and make sure that the totals are all adding up correctly. And once all that's in my transactions tab, I also need to add in the deposit that I just made. So let's just scroll down here to the bottom and throw that in as well. So tax-free savings account, it was $700. Looks like a typo. Canadian on December 20th, 2021. And let's just check the summary tab now. And it looks like everything is balancing out correctly. We've got in the $14 in cash that's left over. And mostly what I'm interested here is the annual dividend income. So we're looking at $2,563, more or less. And at the beginning of the video, it was $2,535. So that's an increase of about $28 per year in pure passive tax-free income. And this number just keeps on growing every time I add in more money and buy more stocks. And then also when I use this money as I get the dividend payments, like all of these different months, I've received all this money and I've used that money also to buy more dividend paying stocks. So that wasn't the money that I deposited myself. And then also these dividends, when we look here in the portfolio, the actual dividend that these companies give out generally increases over time. And so as these companies naturally increase their dividend, it's like the dollars per share per year, then that's also going to increase this number for me automatically without me even having to put in more of my own money. And then we're really getting into this snowball effect where hopefully this can really become a serious stream of income for me and really cover a lot of my expenses as I need them. Like I said, now if I need some expense for like $200 a month, maybe I could use it. Or if I can continue to reinvest this, then later in life, maybe during retirement or later on, this will be much bigger and I could maybe potentially live off of it. So anyways, guys, if you made it this far, thanks a lot for watching. I'm glad someone finds this interesting because, like I said, I'm just kind of documenting this for myself and not a professional, just kind of seeing how it goes, and I'm glad that you guys are following along. So yeah, with that said, leave a comment down below. I'd love to see what you are buying this week, and have a great one. See you in the next video.